as we look at this anniversary, as we mark 1 year since October 7th last year when that attack happened, just tell me, can we kind of paint a picture for us? What does this mean for the oil market right now, the tensions that we're seeing escalating on this 1 year marking?
I mean, obviously, it's a very grim milestone, as Dan Murphy just talked about. I mean, from the oil market perspective, it's still in watch and wait mode. We've had oil prices run up, obviously, after what happened with the Iranian rocket attacks last week in anticipation of Israeli retaliation. We don't know yet what form that retaliation will take. President Biden last week seemingly signaled that Iranian oil infrastructure was on the table. He walked that back to an extent on Friday, saying the United States would prefer that those sites were not attacked. But as Dan brought up, there are some very critical oil infrastructure sites. If they were targeted, like Karg Island, 90% of Iranian oil exports leave that island. Significant storage is held on that island. Obviously, that would be, very impactful for oil prices, and also would lead to questions about what would Iran's response mechanism look like.
I want to get to the investor angle, Helima. Again, a very grim milestone, October 7th from a year ago. There's also a lot of reports there's about 6 million barrels of spare capacity when it comes to OPEC plus. So a lot of people looking at it if this attack would happen. But if you're an investor, that spare capacity, how does that impact the price action if there were some type of attack or some type of escalation?
Well, the most significant real spare capacity is sitting in Saudi Arabia. And the question is, would Saudi Arabia be called on by the White House to immediately surge production? I mean, obviously, that would be an important call I think the Biden administration would put to Riyadh. But the question is, would Saudi Arabia, would the rest of OPEC essentially say, first, we'd like to see the extent of an outage, the duration of an outage. They do not want to get caught in the crossfire of this conflict. There's a really big back and forth discussions about, for example, would an Israeli airstrike potentially fly over some of these countries? What would the Iranian response be? I do think from the standpoint of these major regional producers, they want to hold this conflict at arm's length if possible. So they do not want to be dragged into this broader war.
I want to ask you just about just this situation and also just the geopolitics. Ed Yardeni, noted market watcher, out with a note yesterday. I'm going to summarize. It's kind of a little bit long, but he's assigning a 20% probability to a 1970-style geographically triggered hard landing if the Israelis hit Iran's oil, military, and nuclear facilities over the next few days. How realistic is something like this happening? He's saying, and here, with all they've got, that he's kind of categorizing it as an all-out attack. In your mind, how should investors look at that risk?
I mean, the real question is, again, I think that is the absolute worst case scenario in terms of what it would mean potentially for prices. I mean, if you had a massive attack on all of Iranian infrastructure, and then the scenario I think that analyst is laying out, that the Iranians try to close the Straits of Hormuz, imperil the movement of 17 million barrels a day of oil, obviously that would be, very much your pathway to well over $100, but we're not there yet. We do really have to see what the Israelis hit. What would the Iranian response mechanism be? But certainly we have not been closer to a regional war in a long time than we are right now.
All right. Surprised that there's not, oil's not moving higher. There's not more of a risk premium right now, especially on the day of the anniversary?
Well, again, I think people just don't know what the Israeli reaction is going to be in terms of what they do in terms of Iran. We were a year into this conflict. To date, we've had no major supply disruptions. Yes, you've had tankers targeted in the Red Sea, but we haven't had physical infrastructure attack, frankly, like we saw in 2019. So I do think market participants, having been burned on betting on a Russian disruption just a few years ago, are going to wait to see what comes out of this war in terms of material outage.